Calgary continues to be the shining star in the Canadian real estate market for November of 2023. Hi, I'm Justin Havre with the Justin Havre team of eXp Realty. And here in November, we ended up seeing a lot of transactions still happening in the marketplace where we saw 1,787 properties exchange hands. This is up by nearly 9% year over year. And this is perhaps the strongest real estate market in all of Canada in the current time and space, where in the other markets such as over in Ontario and in British Columbia they're seeing a massive spike in inventories and a dampened buyer demand in the marketplace, clearly due to the higher interest rate environment, which is affecting real estate markets and the consumer purchasing power and decisions in all markets. However, with the price of oil and energy prices being as high as they are, our economy continues to perform exceptionally well, which also supports a very strong and healthy real estate market, which is currently still considered a seller's market here in Calgary, and we're sitting with just under 2 months of inventory. Now, we did see a spike in new inventory enter the market here in November, where we saw 2,227 new properties enter the marketplace. And again, with the strong demand, it still, like I said, remains a strong seller's market. With our active inventory sitting here at the beginning of December with just under 3,000 available properties. So that means, we have just under 2 months, 1.67 months of inventory to be exact. What is this doing to the prices? Well, obviously with low supply and high demand, that means that the prices continue to go upwards, with the overall benchmark price in Calgary sitting at $572,700, which is up by nearly 11%. For single family detached properties, the benchmark price is sitting at just under $700,000, which is up by 13.2% year over year. And the semi-detached, we're sitting at $628,700, which is up by just over 12%. And for row and townhomes, the benchmark price is at $429,100, which is up by a whopping 21%. And apartments, they obviously continue to be really, really strong because of the price point clearly, and the affordability is sitting at $320,100, and the apartment prices have gone up nearly 18% year over year. So the Bank of Canada has decided to keep the overnight rate at 5%, which is what many economists predicted. They are still kind of playing a little bit of a game with all of us Canadians to say that, they may still have the opportunity to increase the rates, although many economists and signs are indicating that we could see some rates being lowered here in the first half of 2024, but really nobody has that crystal ball to be able to predict with certainty what is going to happen. And this is again a game that the policymakers are making to ensure that they get the inflationary rates close to 2%. The higher interest rates is having an impact, and many people are sitting there thinking about their mortgage renewals coming up in the next couple of years, especially if they purchased nearly 5 years ago. It is something that's top of mind. One of the things that we are watching obviously in the market is the bond market, and looking at how that is doing. And the bond market is definitely seeing some downward pressure on it, which has an impact on the 5-year fixed or the fixed mortgage rates. And as of today, we have 5-year fixed rates in that low to mid 5s, which is clearly lower than what it was a month ago. And we're seeing now that 5-year fixed rate actually been decreasing by nearly a percentage points. We expect that we're going to continue to see downward pressure on the 5-year fixed rates. Speaking to some of our mortgage partners, some of them are telling us that the variable rate seems to be somewhat appealing again, and maybe more and more people may be considering that again, depending on their risk tolerance, because I do anticipate that we're going to start to see the rates fall here moving into 2024. Another thing to kind of keep here in mind, obviously, as we're getting into December here, which typically means that the real estate market does slow down. Now, if you are a buyer and you're thinking about perhaps waiting until next year, what I'm going to say here is, here in the slower months of the year is when all the opportunities arise, because there are typically less buyers in the marketplace, which means that perhaps you could be able to pick up some deals out there in the marketplace because there'll be less competition. And obviously in the new year and leading into spring, we're going to see more buyers entering into the marketplace, as well as if the interest rates continue to come down, that in itself will get more buyers off the fence and again create more competition. We anticipate that we're going to see low inventory continue to be happening here in the marketplace, continuing to be somewhat of a seller's market, as we don't foresee any big influx of new inventory entering the market that is going to drastically change our prices here coming into 2024. But if you are looking for an opportunity, you may want to consider taking advantage of the typical slower winter market, especially here in December, and seek out those opportunities. If you have any real estate needs or would like a free, no obligation home evaluation of your home to see how much equity you have gained in your home here in the last year or two, or however long you own your property, make sure that you reach out to us. You can contact us directly at 403-217-0003 or visit us on justinhavre.com and simply fill out a request right on the homepage for a free market evaluation, and we will be in touch with you as soon as possible.